Hello and welcome to Crediversio's Q&A Wednesday for April 28th. I'm your host, David Michalek. Please introduce yourself in the comments. Let us know where you're from. And if this is your first time on our weekly live, great to have you here. So in addition to answering your questions today, these are going to be the most frequently asked questions that we've had this week. I'm going to do some live Q&A with my special guest. And I'm going to bring him in right now. He's been in the credit industry for 30 years. He's worked for both FICO and Equifax with over 2,000 media interviews and 5,000 quotes or published media appearances, On the subject of credit, he's America's #1 credit expert. Let's welcome John Ulzheimer. There he is. All right, welcome. We got a couple of people joining us. Rudy, welcome. Then we've got Scott Oliver. Welcome, Scott. Scott, have you been on here before? That name looks really familiar. All right, Rudy's first time from West Covina. Welcome from West Covina. All right. John, busy week?
Yeah, real busy week. Lots of writing, lots of blogging, lots of expert witnessing.
Yeah, that sounds like a full-time job right there. Excellent. Mike is back. Welcome, Mike. Okay, very good. Well, let's get rolling. So we're doing something not completely unique. We did this last week, and it worked really, really well. We're streaming both to our Facebook page and our YouTube channel. So we'll see if we have anybody from our YouTube channel that wants to chime in today. So, John, interesting week here. We've got a lot of questions from people who... I've seen this a lot with people who are in that unscorable category, and I think that you referred to them as, or the CFP refers to them as credit invisible. Is that the correct terminology?
That's right. The CFPB calls them credit invisibles. It's people who either have no credit score or who otherwise have a thin or limited. There you go. Should help with the lighting. But either a thin or limited credit report.
Gotcha. And I remember at one time we had this discussion. It was probably a few years ago. And correct me if I'm wrong, if I don't have my facts right on this, but I think that you had said that one of the advantages that VantageScore had, at least at that time, was it was able to create a score with a little bit less data than what FICO was. Was that? Now, this is going back about 4 or 5 years ago.
That's still the case. Yeah.
Okay.
So in order to... Not every credit report can be scored. And just because you have a credit report, that doesn't mean you have a credit score. Your credit report has to qualify for a score. So it has to meet certain minimum requirements as far as data and recency goes. And so FICO's minimum scoring criteria standards are more strict than VantageScore's minimum scoring standards, which are less strict. And so because they're less strict, more consumers' credit reports will qualify for a VantageScore credit score than will qualify for a FICO credit score. And so I think the number that VantageScore put on it when they came out with their kind of study of kind of the credit invisibles was, I want to say it was like 20 or 30 million consumers who do not have a FICO score would have a VantageScore. And vice versa, 30 million consumers who have a VantageScore will not have it. Of course, that was several years ago, so that number is probably modified or morphed to some extent. But by and large, and some people look at that as almost a badge of honor, meaning, hey, I don't have a credit report, I don't have a credit score, I win. You win right up until you want to go to apply for something, you want to borrow someone else's money, and then you lose. Because there's not enough information about you in the quote unquote system for you to be processed through, risk-based pricing and automated underwriting programs. And so to the extent that you have limited credit report information and or no score, that's not necessarily a place that you want to be.
Yeah, it can be an expensive place, like you said, especially when you go to get that car or that house. And I see those posts frequently where being the credit invisible definitely comes at a price. Let's talk a little bit about this has been a popular subject lately, and that's Experian Boost. Now, would you say that that's one of, or at least Experian's attempt. I mean, I know that they have several reasons for doing Boost, but would you say that that would be their attempt, maybe to balance things out a little bit, considering that VantageScore has a little bit of an advantage now with Experian Boost bringing in utilities and a couple other self-pay accounts based on your bank account? Is this maybe their response to try to create more scoreable people?
Well, keep in mind that VantageScore is a wholly owned subsidiary of Experian, TransUnion, and Equifax. And so I don't think that Boost is a result of them trying to somehow match wits with VantageScore. They built VantageScore. So that's not really the impetus behind Boost. What essentially and by the way, Boost works for both VantageScores and FICO scores equally. So it's actually a helpful thing for both scoring platforms, not just FICO's scoring platform. So, unless you don't have a television, or if you don't have an internet connection and have lived in a cave for the last 3 or 4 years, you probably have seen some sort of article or advertisement for Experian Boost. And it's an interesting, it's yet another example of a credit related service that is free. And that seems to be where we are now, where the momentum clearly has taken us, where, if we rewind a decade, things like credit reports, credit scores, credit monitoring, these things all were fee-based, meaning you had to pay somebody in order to get these things, except for under certain conditions. Today, unless you're just not doing any research, then it's really easy to get credit reports at no cost, credit monitoring at no cost, credit scores at no cost from any number of places. And Boost, you kind of add Boost on top of the pile as far as yet another free thing that the credit industry is giving to consumers.
For those who are watching that I'm sure have heard of Boost, but might not know the details of how it works, maybe you can take a second and explain what Boost really is.
Sure. So number one, and the reason you'll notice that there is an Experian logo associated with Boost. Boost is an Experian-only service, meaning that there is no Equifax Boost and there is no TransUnion Boost. It is Experian Boost and only Experian. So Boost allows consumers to essentially cause utility-style information to end up as a trade line on their Experian report if it's being paid through like a deposit account, like a checking account or a savings account. And Experian has partnered with a company called Finicity, and what Finicity will do is they will, using your login credentials to your online banking account, they will actually go into your banking account as if they were you, and they will, I think it's called screen scraping. They will essentially screen scrape all transactions of utility style accounts. So things like your water bill and your power bill and your natural gas bill, depending on where you live in the country. And I think also there are some streaming services that you can also have added to your Experian credit report as a trade line. And so once they find that information, they will normalize it into the form of a trade line, and then they will provide it to Experian, and then Experian will place it on your credit report. And so if you look at your credit report and you see what's essentially kind of consumer added utility information, that's what a Boost trade line will look like. And they have actually they control the influence of the information. So normally when a trade line hits your credit report, and I think everybody watching knows this, three things can happen. Your score can go up, your score can go down, and your score can stay the same. So it's either positive, negative, or neutral. With Boost, the data is only going to be neutral or positive. So you don't hear any stories about, hey, I added a Boost trade line to my credit report, my score went down 5 points. You don't hear any of that stuff because it's not systemically possible. So it's either going to be a neutral impact or it's going to be a positive impact. And so Boost kind of almost breaks the mold, if you will, a little bit, because if you look at what's on your credit report, it's traditionally been stuff provided by either debt collectors or financial services companies, banks, credit unions, credit card issuers, loan servicers, folks like that. And you very rarely, if ever, saw utility trade lines as a performing trade line. Certainly you'd see them as a collection from a debt collector, but it's very rare that you saw them as a performing trade line. So this is a good way of kind of breaking that financial services model to some extent.
Yeah, and people are taking up that offer from Boost because one of the things that Credit Versio does, the AI is scanning in some cases thousands and thousands of credit reports on a weekly basis, if not more. And that's one of the things that we see happening is people adding self-reported information to their credit report and sometimes taking it off too. Would you say that there's any risk, any downside to taking advantage of Boost? I mean, I think one thing that people have to keep in mind is that, I mean, this serves two functions. I think for Experian is it's that maybe that average 12-point increase in score is what they're reporting, but at the same time, it's kind of brilliant that they're getting access to all of your banking information at the same time, just to get a better you get more information about who you are.
Yeah, I mean, that's one of the trade-offs, right? Is if you want them to be able to see this information, or your utility company is not going to report your information to Experian. So if you want that on your credit report, then there's a little bit of a give and take associated with it. They're not asking you for money, they're asking you for access to information. And so that's really the trade-off. If you're uncomfortable giving that level of access, then don't do it. And if you found out after the fact that, oh, I didn't realize it was going to be this invasive, you can unplug Boost essentially, and then end the program. I don't know if I have the ability to share my screen with you, but I've actually pulled up my own. I think I can share my screen with you. I've actually pulled up my own Georgia Natural Gas account, and so maybe I can't share it with you.
Yeah, I'm not quite sure if we could make that happen.
Anyway, it would give you a really good idea of essentially what, there it is. So it's this. So I don't know if you have the ability to kind of pull that up so that the crowd can see.
I'm not quite sure. Hold on, I don't want to start. There we go.
Yeah, so this is, so if you can see what's on your screen here, this is what it looks like. This is what a utility trade line looks like on your Experian credit report with Boost. This is a self-reported utility. The creditor is Georgia Natural Gas. That's who, a lot of people in Georgia where I live that use for their natural gas service. You can see the attributes of my account, when it was opened, the balance, the status, the payment history. And I actually had this added until midway through 2019. And then I stopped it because I just wanted to take the consumer experience, and I did, and this is what it looked like, and so that was it. So that's what it will look like on your Experian credit report, regardless of what type of trade line you choose to add.
Now let's see if I can figure out how to get us back. There we go. Well, we switched spots, but that's okay.
Now I'm the host.
Now you're the host. Okay, take it from here, John. All right. Well, let's take a quick break from this. So we got a question or two here. All right. Let's see. Derek Dawson. I have a debt collector trying to sue me because I disputed an account off my credit report. Do you guys help with that? Well, to answer your question, Credit Versio is a dispute platform to help you write letters. We're not a credit repair company. We don't do any consulting like that. Also, I don't know, John, do you want to weigh in on this? I mean, I certainly have my opinion on this, but I don't know if this is something that you want to.
So first, if they're trying to sue, they're either suing you or they're not suing you. There's not really an effort involved with suing somebody. You either file a lawsuit or you don't file a lawsuit. And if they're threatening to sue you, and it would be an FDCPA violation if they threatened to sue you and had no intention to sue you. So they can't threaten without intending to actually do so. So I would take them seriously at their word if they're saying we're going to sue you if you don't pay this debt. And as far as the trying goes, really it's not that hard. Most of these debt collectors either have in-house collection attorneys or they partner with collection attorneys that will file these lawsuits. Look, if you owe the debt, you should probably work out some sort of a settlement with them. You can ignore the debt collection calls, you can ignore the credit reporting, but you can't ignore the process server that knocks on your door and hands you the lawsuit paperwork. And if you don't show up, you're going to lose by default. They'll get a default judgment, and then it just goes on and on and on and on. They may try to garnish your wages. It just keeps going on. So to the extent that you actually owe the debt, and you know if you do or you don't, see if they'll accept some sort of a settlement for whatever it is that you owe them and be done with it and move on with your life. And then hopefully you can avoid the legal ramifications. It's not a cheap date to hire a lawyer to defend those lawsuits. It might actually be cheaper just to settle the debt.
Yeah. And one thing too is, having looked at tens of thousands of credit reports over the last, coming up on 9 years, we don't see judgments on credit reports anymore, not as of 2017. Is that right, John?
Yeah, it was mid 2018 when the credit bureaus purged them, but they still show up on those LexisNexis reports that the mortgage lenders buy, mortgage lenders buy, and they're still a public record, which means that any lender can see it. And by the way, in the Fannie Mae Form 1003, which is the uniform residential loan application for all mortgages, there's a question and the question is, are you a party to a lawsuit? And if you say no, then you just lied on an application, which is a crime. So just because it's not on a credit report, please don't think that all of a sudden it's no big deal. It's still a big deal, and lenders still have access to see it.
Yeah, it's messy business too. Like I've watched the progression of people go through this process where we used to be able to see the judgments on the credit report, and you can see where it went from original creditor to collection company, and then a judgment because they didn't respond. And always it's good to pick up that phone before you get that process server, before things get serious. Pick up that phone and just cry uncle a little bit and say, hey, can we make a deal? Because like John was saying, you don't want that on your public record. Okay, Scott Oliver. We have quite a few more than what I thought. Renee Tracy. Okay, I'm having trouble getting Equifax to respond to my letter. I've sent 3 so far, allowing them 45 business days to respond. What next? What do you recommend? That's a very unusual set of circumstances. Nothing at all. Let me see if I can keep that up again. John, not a very common thing, I would suspect. What do you, I think we've talked about this a couple of times. You had mentioned that maybe it might be an ID problem or...
Well, I don't know what letter to which you're referring, but...
Well, he's referring to a dispute letter, I'm sure. It's probably coming out of Crediversio.
Yeah, so if they can't not respond unless they have reason to believe that it's a credit repair dispute. They have to do something with it if they've received it. And that's straight out of the FCRA. There's an exclusion to process disputes if there's a reasonable belief by the Bureau that it's a credit repair or a frivolous dispute. So that's number one. That could be a reason or an explanation why you haven't heard anything. Number two, they may not have actually gotten it. And that's, given what's going on with the U.S. Postal Service right now, that's not an impossibility that's occurred. So you might want to just resend your letter. Obviously, the credit bureaus don't have an obligation to process a dispute they never received, and the furnisher doesn't have any obligation to process a dispute that they have not gotten from any of the credit bureaus yet. So it doesn't really, just because you sent it doesn't necessarily mean that anything has to be done. They have to actually receive it in order for their obligations and for the chronology of events to take place. There isn't a pass, and so there's been some, I don't know if they're rumors or myths or whatever, but they're, just because of COVID, nothing happened to the FCRA about the 30-day limit. That's untrue. If you've heard that from anybody, that the CARES Act modified the FCRA to give the credit bureaus more time, that's factually inaccurate. It did not. I know exactly how it modified the FCRA. We've been talking about this for a year now.
Yeah.
With credit reports that are pulled off of annualcreditreport.com, or if you provide supplemental information, then you give them an additional 15 days. And so the time limit goes from 30 to 45 days. But still, you should be hearing something from them, either an acknowledgement that they've received your dispute. If you're not hearing anything at all from anybody ever, then my guess is that they just didn't get it.
Yeah. Shoot us an email at support@creditverso.com. Maybe we'll do a little troubleshooting and see if it's something that we can help you out with in a little bit more detail. Okay. Scott Oliver. I did Boost. My score went up some. Is this only going to help me when I tried to buy a vehicle if the lender only checks Experian? That is a great question.
It is a great question, and so the answer is yes, but not all versions or generations of credit scores consider utility trade lines. And so I'll give you a great example. The credit scores that mortgage lenders use are really, really old generations. Think iPhone 2, if you even can remember what that looked like. But the really old credit score generations do not consider utility style trade. So if you were trying to apply for a mortgage, I would tell you that it's not going to help you at all. Auto lenders obviously are not beholden to the same FHFA guidelines that mortgage lenders are beholden to. So they can choose whatever credit score they want to use. And as long as they're using FICO 8 or newer or any version of the VantageScore, then the utility trade will be considered in those scoring models. And if they use Experian for their credit report, then you're in good shape. If they pull an Equifax report or a TransUnion report, then Boost isn't going to help you because that's an Experian only service.
Yeah. Well, just this is one person's experience, but I bought a car recently and went through Wells Fargo for the financing, and they use the FICO Model 8, so the auto Model 8 that I saw right in my Experian app. When they showed me the score, it was the exact same score. So had I been using Boost, it's not something that I need necessarily, but had I had it, that would have been a more contemporary scoring model.
That's right. That's correct.
Margaret Gray. Oh boy, we got a big one here. Let's see if I can scale this a little bit. Okay. Margaret, if you are paying a loan back, but not in full, the full amount on the contract, and the company is still reporting your payments are late. Whoop, one more time. Due to the full payment not made, is it best to work on paying off completely and contact the company? Will they delete the entire item off all 3 reports, then start building credit? Okay. Well,
so I can start. I can help with the first half of that.
I was going to say, why don't we chop that into 2 pieces?
Yeah. So I don't know what type of a loan it is, but don't take this the wrong way, but I'm going to give you a little bit of tough love. You cannot dictate the terms of engagement with your lender. Okay. If the promissory note that you signed or the agreement that you signed calls for a payment of $500 a month and you send them $100 a month, you might as well not be sending them anything because you're not making your payment. They don't have kind of casual or unsophisticated methods of like holding on to that money and then giving you kind of partial credit. That's not how, there's no terms in your agreement that indicate that you're allowed to do that. So you might want to ask them, what are you doing with these payments that I'm sending you? And if it's a mortgage, they may be putting it in what's called a suspense account. And what a suspense account is basically just, think of it as a deposit account. And basically you just keep putting money in there that's not sufficient enough to cover your oldest payment, which is, by the way, still getting delinquent. But once enough money has been accumulated in the suspense account, they will apply it to your oldest payment, which doesn't bring you current. It just makes you, instead of 120 days late, now you're just 90 days late. So nothing good comes out of suspense accounts. And so if I were you, I would ask them, what are you doing with the money that I'm sending you? And if you check your credit reports, they might be reporting you as rolling delinquent every single month. But eventually they will stop accepting your payments. They will start sending them back to you because they don't want suspense accounts. They're an accounting nightmare for a lender, and they don't want their customers to become comfortable with making payments like that. Right. So that's the kind of the issue of the first half of that question. Look, if it's a federally backed mortgage, you might be able to get a forbearance extension. If it's some other form of a loan, like an auto loan, if it's a federally backed student loan, then it's probably still in deferment. So it sounds like it's some form of a loan that is not a government-backed loan, and so I would be real careful with making these less than required payments because the bank is very unlikely accepting them as full payment due.
Yeah, so Margaret, you're going to have very likely what we would see is it's a personal loan. Okay, yeah. You're going to get, very likely, if I were to look at the credit report, what we would probably see is rolling 30s or maybe rolling 60s. really
and they'll get worse. They'll eventually get worse. The rolling 30 will become a rolling 60, which will become a rolling 90, and it'll just keep getting worse.
Yeah, until, God forbid you get, they charge off the balance. It's a possibility. If you can recover from this and get back on the payment plan, just like John said, it's got to be whatever the promissory note said. One of the things that I see working that may help you is, maybe a goodwill letter. But you got to understand the component of a goodwill letter is you got to have a good payment past, a moment in time where things are just going sideways. That's happening a lot for people right now with COVID. And then you have to recover. You have to get back on track. And really what you're doing is you're just throwing yourself at the mercy of the lender saying, hey, I've been a good client, went through a period of time, I'm back on track now, and then ask the favor if they would help you out with that. They may or may not. Okay. Mike, here we go. Mike Smothers. Hello, David and John. Since I have established some good credit, I'm curious, can I get rid of my 2 cards that are only low limit with crazy yearly fees? Does that mess with the credit history? Just curious. It would be a big or small point drop. Well, I think I read that off in time.
You did.
Okay, that's a really good question. John, I know that's one of your favorite subjects to talk about.
Yeah, I'm not, I'm really never supportive of closing credit cards, especially if you're in the process of rebuilding. There's a lot of value in the unused credit limit in your credit score. I don't know what a crazy fee is, but to the extent you can ask them to lower their fee or waive the fee because you're looking at other cards as a replacement, perhaps they would be willing to work with you on something like that. Look, ultimately, if you want to close the card, close the card. Just don't close it right before you go out and apply for something. So if you're going to close your card, fine, but just do some triage and see if you can get a good understanding of what your score was before you close it and now what your score is after it's been closed. And if it's only gone down a few points and maybe you can boost it and increase it because to kind of net the negative effect, if any, of the closure, then you're in good shape and you're rocking and rolling and you're not paying that annual fee. But I would be real careful about the timing of doing that. As far as there's a pretty prevalent myth about closing credit cards and why you should never close your oldest card because of the age. And that's a myth. You don't lose the value of the age of the card just because you closed it. So it doesn't really matter how old the card is that you choose to close. You can close your oldest card and it's still your oldest card. It's just you should lose the value of the limit. That's really the issue. In fact, as long as the account remains on your credit report, then it even continues to age. And so a 10-year-old American Express account today is going to be an 11-year-old American Express account next year. And so you still get the value of the age of the card, but you're absolutely going to lose the value of the unused credit limit, which can cause your score to go down, which is why you always read, from experts, don't close your cards, don't close your cards. That's why you read stuff like that.
Yeah. It depends on what those crazy fees are. It's $100 a month or so, or a couple $100. I'm sorry, not a month, but a year to renew. Then it might be worth it to keep that open. Derek Dawson, let me straighten that out a little bit. David, I signed up for Credit Versio because of you, and my credit score went up 139 points. Derek, that's all on you. Congratulations. That's great to hear. That's all about you doing what you need to do to have better credit. Hopefully, you're building and continuing to make some smart moves. Congratulations. Okay, let's see. I know we had another question down here. Let's see. Excellent, Mike. Yep.
That's awesome.
Love it. Okay.
Thank you, Mike.
120 a year on a 300. Yeah, that's a little spendy, Mike.
Yeah. That's what's called a fee harvester card.
Yeah. Right.
The intent of that card is to harvest fees from you. And you know what, Mike? I'm going to amend my answer. You're not getting a whole lot of value out of a $300 credit limit.
I was just about to say that. Yeah.
Yeah. So, again, if you're about to apply for a mortgage next week, don't close it today. But I think you're probably okay. If you would have come and said, yeah, I've got a Visa with a $25,000 limit, I would have said, whoa, pump the brakes a little bit. But a $300 credit limit is pretty low. And it's very likely that you know what, all you have to do is take that $120 that you're not going to spend in annual fees, pay down some other credit card, by a few $100, and you're essentially netting out. The math problem stays the same. You just lower the numerator and the denominator equally, and so your ratio is going to be the same. And now you don't have to worry about an annual fee next year.
There you go. Great advice. Scott Oliver back. Okay. Sorry for too many questions. Hey, don't be sorry, Scott. That is what we are here for. Currently on COVID forbearance with my mortgage company. I noticed that my balance is being reported on my credit report as an increase. How does that happen, and will it eventually hurt my credit? Oh, hold on. By the way, we plan to sell before we have to start paying back again. Thank you.
So forbearance has a very simple definition, and that is that you're not making payments because it's being essentially added on or tacked on to the tail end of your loan. So I don't know what credit report program you use that indicates that your balance is increasing. That's quite possible because it's almost like a negative amortization mortgage, right? You're not making a payment, but you're still accruing interest, and so it is possible that your balance is going up. Keep in mind though, installment debt is, I don't want to say it's immaterial because that kind of insinuates that it's something you shouldn't worry about it, but it's really, really pales in comparison to revolving debt as far as an influence on your scores. And so I wouldn't lose sleep over that, even if you're, I'll tell you a personal story. So I had a $240,000 or $250,000 Wells Fargo mortgage that I paid off when I sold a house. And so the balance went from roughly $250,000 to zero. My score went up 4 points. And I can't even guarantee you that that my score went up 4 points because of the payoff of the mortgage. It may have gone up 4 points because I lowered my credit card debt or some inquiry got, you know what I mean? It could have been something else. So, it's one of those things that you shouldn't worry about too much because the effect of installment debt, if it's being paid on time, of course, is really this close to being immaterial.
Okay, great answer. Melissa, I would love to bring your question up for John, but here's one really important thing. John is a credit expert, not a credit repair expert. This is pure credit repair. I know you and I have been going back and forth on this in detail. If you want to get on a phone call with me, let's do that. But that's a question I think I'll handle more offline. Okay. So it looks like we got all the questions so far. I'm sure someone's going to pop in there and ask something else. So we talked, John, about Boost, and that is purely an Experian service. Now let's talk about what we got. We still got Equifax and TransUnion to contend with. Now for they don't have a free service like Experian does with Boost. So there are other services that are out there. I know you and I talked about one earlier that you weren't familiar with, but it's actually not so much utility reporting when I thought about it for a second. But here's one, and another one that you've heard of, I've heard of. And by the way, as of this recording, we're not endorsing eCredible. We have no relationship with them whatsoever. This is just something that we're using as an example because John and I both are familiar with this company. And John, are you familiar enough to maybe go in a little detail with a service like an eCredible or anything else that's sort of in this camp?
Yeah, so eCredible is a company that, and their service is called Lyft, not Lyft like the competitor to Uber, but Lyft as in Lyft. So think of Lyft as, and they would not appreciate me saying it's similar to Boost because they would probably argue that it's different and better and blah, 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 but it's similar to Boost. It's similar to Boost in that you can cause utility style accounts to end up on your TransUnion credit report. The difference with eCredible is they don't all show up as these self-reported utilities. They actually do show up as a legitimate trade line, ECOA compliant, FCRA compliant trade line. And so here's something to keep in mind. An eCredible trade line can cause your score to go down. I mean, it's fair game. If you make your payment on your utilities, that's fantastic. If you default on your utilities, that's going to end up on your TransUnion credit report. So Unlike Boost, where Boost is neutral or only positive, eCredible is almost like a trade line, but without the training wheels. You have to manage it properly in order to get the lift or the positive benefit in your score. And the same thing counts here as did with Boost, in that if you go apply for a loan and they pull Equifax, neither Boost or Lyft is going to help you because they're a Experian and then a TransUnion service where there is no similar service for with Equifax. eCredible, I think, is $20 a year or something kind of.
I think that's right. It's pretty low.
Okay.
Yeah.
Pretty reasonable. I mean, it's not even a bad bar tab. That's how low the amount of money is. So again, do your research. Go to the eCredible website. You can see, I think there's 7 or 8 different types of accounts, like mobile phone. I mean, it's more than just your utility accounts. It's going to be things like your internet and your mobile phones. Your pay television, like your DirecTV and your satellite and stuff. So it's a little bit more. It's a little bit more inclusive of the utility style information than only Boost. So just keep that in mind. It's both positive and negative. So that's something you're going to want to. That's one of the main differences. It doesn't have those training wheels like Boost does.
Yeah, and I can't say that this is 100%, but we do have somebody who knows them pretty well, and we did have a conversation with eCredible at some point, and they are working on Equifax, from what I understand. I don't know if they're going to get it, but TransUnion is already up and running, and they seem pretty confident that Equifax is going to be following suit pretty soon. If they can get that, then they got something even more real there. I think that would be very cool for them.
That's right.
Okay. Get rid of eCredible. And so we're coming down to up to the about 40 minutes or so. So if anybody else has any questions, please drop them in there. We'd be happy to get to them. And I wanted to finish up with the other one, which is in the same vein. I want to get your opinion on this, John. What do you think about, there's a handful of services that do rent reporting. I didn't pull anybody's name up to show on the screen, but it's a pretty easy Google search if somebody was interested in that. What are your thoughts on services that will report your rent payments?
Yeah, so I also don't know any of them personally, so I can't say if they're good or bad. But to the extent that you can get a rental trade line on your credit report or credit reports, there are, again, it's the same issue with generations of credit scores. Rental trade is considered, but only in the more contemporary versions of credit scores. So this should be part of your research if you're considering any of this stuff. Boost, Lyft, these rent credit reporting companies, is read the fine print and find out what credit bureaus they report to. If they report to a credit bureau you've never heard of, then you're wasting your time. You want them to report to the big 3, or at least some of the big 3. That's, I know we're in 2021, the era of disruption. The big 3 are still the ones that matter. So do your research on where. It's almost like a secured card. Make sure they report to the big 3, or it's like a tree falling in the woods. No one cares about it. So that's number 1. Number 2 is you just want to make sure that what they're reporting is being considered in the contemporary versions of the credit scores, which are the ones that have critical mass of users. FICO 8, FICO 9, VantageScore 3, VantageScore 4. Those are the ones that are important for auto lending, credit cards, and where most of the inquiries come from with the credit reporting agencies. But yeah, to the extent you can get a rental trade line on a credit report, and that either causes you to have a credit report or B, causes your credit report to become scorable, those are good moves, because that's your trajectory is in the right direction. That's what you want your credit report to be. You want it to be voluminous enough to qualify for a score, and then you can start worrying about, how do I get that 650 to a 750 to an 850, where lenders are essentially fighting over your business by throwing money at you at low rates. And so if it takes adding a rental trade line, then more power to you. I don't know what they cost. I don't think any of those are free. I think there's a fee. Yeah, if I remember, and again, I haven't done a deep dive into this, but I think there is a cost involved, and I think that your landlord has to agree to it. Where with Boost and Lyft, your utility companies do not have to agree to it. You can kind of backdoor the process to some extent, where with these rental trade line companies, I do think that the landlord has to be in agreement to allow it to be reported.
Yeah, somehow I think they reach out to them, I'm not sure, and have them sign some, agree to post the history of the rental payment. Now, does that come across as like an installment, or is it just a blank trade line? How is that read by FICO and Vantage?
Well, rent, I mean, it has to be reported in Metro 2, which is the credit reporting language, and it has to be reported as an appropriate. You can't report it as a credit card. You can't report it as an auto. You've got to report it as rent.
Okay.
And so if it in fact is rent, then it's got to be reported as rent, which is important because, again, those older credit scoring systems don't consider rent. Only the newer ones consider rent, and it's all based on how it's coded. It has to be coded accurately, or you're essentially reporting something that's knowingly incorrect to a credit bureaus, which is a bigger problem than for the rental company. But yeah, it would show up. Rent is an installment account, meaning that if you've signed if you're renting an apartment for a year, you've got essentially 12 equal payments of some amount of money, and then your contract runs out, and you can renew your rental agreement for a year, and then you have another 12-month agreement for some fixed amount of money every single month. So it's definitely reported as an installment style account.
Excellent. Okay, so we're coming down to the end of our time. Does anybody else have a question that John can answer for you? Very good, Margaret and Melissa. Okay, got some thanks. Appreciate that. If you like what you're hearing today, definitely hit the like button. Give us a little love, and that way it'll post up a little bit higher. Mike, you are very welcome. Okay. All right, so I think we're going to bring this to a close. If you're watching this video after it was live, feel free to post a comment. Make sure to get your question answered. John, thank you so much again for being our resident credit expert and our expert contributor. Definitely appreciate it. And we'll look forward to seeing you on the next Facebook Live. Thank you, everybody, for joining us today, and we'll see you next time.
Thanks, Sean.